Hi, my name is Kenny, and I'm the co-founder of Nephilim Capital. Nephilim Capital is a financial technology and data analytics company that's registered as an alternative investment fund manager by the Financial Supervisory Authority of Norway. Nephilim Capital provides exposure to alternative assets for clients that are seeking adequate diversification and, more importantly, non-correlated returns with their existing portfolio. The intense competition and almost perfect market efficiency of traditional capital markets makes it very challenging for investors to generate above average returns. And regardless of your position on the efficient market hypothesis, the fact still remains that most active investors fail to outperform the market in the long run. And despite events such as the 2008 global financial crisis and latest research in the fields of behavioral finance that highlight inconsistencies in the efficient market model, the efficient market hypothesis still remains the most widely used and recognized framework on financial markets for the relationship between risk and return. Therefore, the fact of the matter is, the less efficient a market is, the more opportunities it presents. And alternative financial markets are just generally less efficient than traditional financial markets. The idea for Nephilim Capital evolved because of my love and passion for football, a sport that I've played competitively in Australia, Denmark, and Norway. The light bulb moment came when I was working as a derivatives trader, trading CFDs and options contract. That was when I began to see the abundant similarities between trading options contract on traditional financial markets and on sports futures market. Then sometimes in 2015, I was at a house party, and this was when I met Victor, the co-founder of Nephilim Capital. Victor was a poker player at the time while also studying at BI Oslo Business School. It did not take long before we realized that we shared similar ideas about financial markets. Our game theoretic and probability-based decision-making approach to financial markets made us decide to start Nephilim Capital. Sports trading has evolved into a financial market in its own right, consisting of price takers and price makers in an auction-style financial exchange. And while traditional capital markets are almost perfectly efficient, sports trading markets are far less efficient. The advantage of sports trading markets lie in the market inefficiency, and this is due to the emotional predisposition of the market participants. When trading on traditional capital markets, you are essentially competing with the smartest minds, the fastest computers, and the largest corporations. And this is why traditional financial markets are very efficient. We are simply better off trading markets that are a bit less efficient and where the market participants are not as sophisticated. So therefore, by applying the best aspects of quantitative finance to a market overflowing with irrational market participants, we position ourselves to have a greater edge on the market. And in the words of the legendary Charlie Munger, investing is simply a mispriced gamble. It's about finding a horse with a 50% chance of winning, but which pays you 3 to 1.